Thank you for joining me today for our panel, Bitcoin, Crypto, and Blockchain 101. It is my pleasure to first introduce our moderator, Jason Pandak. He is the Vice President of Capital Markets at AmeriVet Securities. Jason is a Marine Corps veteran who deployed to Iraq for 3 combat missions. After 8 years of service, Jason started his professional career at Pandak, a small high-tech design and engineering firm based in Detroit. He then worked at Booz Allen Hamilton, where he supported the U.S. Army's Tank and Automotive Command. Upon relocating to New York City, Jason worked at Gavin DeBecker and Associates, the world's premier executive protection and physical security firm, before joining AmeriVet Securities. Welcome, Jason. Our first panelist today is going to be Lee Bratcher. He is the president of the Texas Blockchain Council. Lee Bratcher is the executive director for the Institute of Global Engagement at Dallas Baptist University, as well as a faculty member teaching international relations and blockchain courses. Lee received a blockchain instructor certification from IBM and researches blockchain solutions in land administration. He is a captain in the U.S. Army Reserves, working as an instructor for ROTC cadets at DBU and UT Dallas. Lee was awarded a master's in international relations from St. Mary's University and is in his 5th year as a PhD candidate at University of Texas, Dallas, writing a dissertation on blockchain for land administration. Prior to his transition to academia, Lee served in the military and as a police officer in the DFW area of Texas. Welcome, Lee. Thank you for joining us.
Thanks, Catherine. Glad to be here.
Our next panelist is Joseph Mortati, a professor at American University in Washington, D.C., instructing in information systems and serving as co-director of the university's blockchain hub. He began his career in the U.S. Air Force flying F-4 Phantom supersonic fighters. Upon moving to the private sector, he worked as an IT project manager and business analyst until starting his own consulting business, which he ran for 10 years before moving to academia as well. His research areas are emerging technologies and analyzing cases of American aviators unaccounted for from the Vietnam War. Welcome, Joseph.
Thank you.
Excellent. All righty. Our final panelist is the lovely Stephanie Vaughan. She is the Chief Operating Officer for Equa. Stephanie is an experienced operations and finance professional with deep experience in blockchain, crowdfunding, venture capital, and investment banking. At Equa, she leverages her experience to align new company formation and management solutions to client needs. Prior to Equa, Stephanie served as COO for David Chaum's blockchain project known as XX Network. In 2012, she received an honorable discharge from the U.S. Marine Corps at the rank of captain. Stephanie holds a BS in quantitative economics from the United States Naval Academy and an MBA from Columbia School of Business. Thank you all for being here with us today. Jason, please take it away.
Yeah, thank you, Catherine. And Joseph, I'd like to start with you and start with Bitcoin and blockchain basics. If you could please briefly define Bitcoin and blockchain, how the two interlace, and the basis for the distributed ledger technology.
Sure, thanks, Jason. So let's talk about the blockchain technology first for a couple minutes. So simply put, blockchain is a network of computer nodes that allows transactions to be made. So it uses what's called a cryptographic security model that links new blocks of data to previous blocks, and that's where the word blockchain comes from. Now, in theory, this chain cannot be broken. And like most technologies, blockchain has many use cases or uses of specific cases of using something. So for example, if we look at the internet has many use cases. Email, social media, news and entertainment, e-commerce, the list is endless. So in blockchain, the multiple use cases include cryptocurrencies, the best known of which is Bitcoin, something called decentralized finance or DeFi, supply chain management, electronic voting, and others. Now, the main characteristic of blockchain is that it's what's a decentralized ledger. So think of a ledger like a place where you would record transactions. So it could be money, it could be inventory, it could be both. You keep track of what comes in and what comes out. And this decentralized ledger provides a few important benefits. The first is it allows what's called peer-to-peer transactions. That means you can conduct electronic and directly between parties. There's no intermediaries and there's no middleman. This makes the network is also trustless, permissionless, and nationless. That is, it uses technology to establish trusted connections. And again, there's no middleman, there's no third party in between. The transactions are immutable, meaning that they cannot be changed. In other words, once they're added to the blockchain, they can't be changed. And this is to avoid something called the double counting or double spending problem. And lastly, the transactions are pseudonymous, meaning they're linked to an account and not a name. So when we talk about blockchain, or Bitcoin, we have to distinguish between the Bitcoin blockchain. Think of that like a payment network, like Visa, MasterCard, bank transactions, and Bitcoin, the currency, the cryptocurrency. So I'm going to focus on the latter. Now, Bitcoin was born out of the financial crisis of 2008. Now, I think you're all old enough to remember that. You lived through that. You might have even lost your job as a result. But one of the things that came out of that financial crisis was that the trust between consumers, banks, and the federal government was damaged. So a person going by the name of Satoshi Nakamoto came up with this idea of Bitcoin, an electronic currency. And the beauty of Bitcoin is that it can't be printed, it can't be created out of thin air like all currencies in the world. And the value is only governed by supply and demand. Now, you may have heard that Bitcoin is equivalent to digital gold. It's not quite exactly right, but to give you an idea of how rare gold is, all the gold mined in history is about 165,000 tons, so metric tons. So this would fill up about 3.5 Olympic-sized swimming pool. Now, Stephanie's going to talk about key attributes of successful currencies, but just like gold is difficult to mine, that is, each additional or marginal ounce is more difficult to pull out of the ground than the previous one, and finite, Bitcoin is difficult to mine electronically and has a finite supply. So Bitcoin comes into existence when users known as miners solve increasingly difficult mathematical problems, and this is referred to as proof of work. For every mathematical problem that's solved, a new block of data is added to the previous blocks in the chain, and the miner is paid in Bitcoin. That's how they incentivize to make money. Now, this begs a very important question. Now, doesn't that mean that just Bitcoin is just a bunch of ones and zeros in a database somewhere? Well, yes, but just like the amount of money in your current bank account or your credit card statement is just a bunch of ones and zeros in a database. So said another way, author Yuval Noah Harari wrote in his 2015 book, Sapiens, A Brief History of Humankind, he basically said that all money is just a made-up story, but it's a story that everybody believes in and shares. And this explains how humans could have traded things like beads and buckskin and seashells as money, things that seem very odd to us. So I want to say one last thing, and then I'll wrap up, is that you might be skeptical about cryptocurrencies in general, and that's rightfully so. But I also want you to think about what is the value of a payment network that would complete or could potentially replace middleman, governments, central banks, eBay, Visa, MasterCard, and so on. Do you think that would be potentially useful to you?
I certainly do. Thank you for giving us that overview, Joseph. And, as you mentioned money, I'd like to turn it over to Lee to talk a little bit about the history of money, purchasing power, specifically, for us here, the purchasing power of the United States dollar and overall monetary systems. Why do we even need Bitcoin in the first place? Why would we need such a thing as a distributed ledger? And, in your opinion, is Bitcoin a contender to replace the US dollar?
Great question, Jason. I'm going to start 500 years ago with the advent of double entry accounting. And you might be surprised that I'm starting there, but it will get to the point where we answer the question about the US dollar and as if it's competing with Bitcoin. So 500 years ago, double entry accounting was invented by Luca Pacioli in Italy in the Renaissance. And that's how you enabled transfers of value and trading across time and space between actors that don't know each other. And we've used that system of accounting, debits and credits, for the last 5 centuries. When we get today, as Professor Mortati alluded to, we're simply using a distributed digital ledger to take the place of all the middlemen that operate as a trust layer between transactions and when value is transferred. So some have surmised that Bitcoin could eventually overtake the dollar as the world's reserve currency. To perhaps the price of oil will be priced in Bitcoin one day rather than the U.S. dollar. And I would say that's possible and likely to happen 100 years from now, 50 years from now. But in my lifetime, it's unlikely to happen. And I would prefer to see the U.S. dollar remain the world's reserve currency for the next several decades. And the way I talk to elected leaders about that is I tell them, in order for the U.S. dollar to remain the world's reserve currency, we need to have low interest rates. We need to have treasury bills need to be at 1-2%, so that our borrowing costs are sustainable, because we have a lot of debt in our country, and that's not changing anytime soon. So if we lose world reserve currency status, that becomes a big problem for us, because we're having to borrow in other currencies like yuan or euros or pounds. So we can't just continue to print endless amounts of money. However, if the federal government or a state government, like for example the government of Texas, were to establish a Bitcoin strategic reserve that increased in value over time, investor confidence in the creditworthiness of that state or the country as a whole would increase. And if investor confidence is increasing, then borrowing costs are remaining low, and the U.S. dollar remains the world reserve currency for decades to come. So the U.S. dollar and Bitcoin are not competitors in the short run or the medium run. Now they may be in the long run, but again, you and I will all be dead by the time that happens. So in the short run and the medium run, they work in tandem. Just like the U.S. has a strategic gold reserve, we need to have a strategic Bitcoin reserve as well.
Yeah, thank you, Lee, and I will not thank you for bringing up debits and credits again. That was some unpleasant flashbacks for some accounting classes. But I'd like to continue on the theme of successful currencies. And Stephanie, successful currencies have 6 key attributes: scarcity, divisibility, utility, transportability, durability, and accessibility. The cryptocurrency Bitcoin has value because it holds up very well when it comes to these 6 characteristics. Yet its biggest issue in its status as a unit of exchange is the lack of most businesses accepting it as a form of payment. Why do you think there is a hesitancy to adopt, and what are the risks?
So I think there's a few things happening right now with your question, but I don't know if it's a hesitancy for businesses to accept Bitcoin. It's just that there is a lot of volatility within Bitcoin and how Bitcoin is sort of perceived in the world right now. So I would say the Satoshi vision that Joseph talked about in the beginning, with Bitcoin being a peer-to-peer system for transferring money, is not what the sort of reality is today. People are using Bitcoin more as a store of value and closer to what people would use for gold. And you see a lot of big businesses lately, Elon Musk, Tesla, MicroStrategies, taking Bitcoin and putting it into their corporate treasury, and in order to use it as a store of value, which is an important attribute of money. So I think what we're seeing is people are using this kind of store of value first for Bitcoin, which is important for any currency sort of that's ever existed in history. Like even the US had notes in the very beginning with the first bank with Alexander Hamilton to use our currency as a store of value. So we're seeing that now with Bitcoin, and I think that'll lead, it's just a step in the sort of overall adoption, but it is sort of too volatile right now, and the technology is too slow with the way Bitcoin works with proof of work for the network to sort of have these true peer-to-peer payments. But there are different technologies as well focused on that, like the Lightning Network. So I don't know if anyone has any follow-up questions, but hopefully that answers that question.
Yeah, I think it does, and I'd like to turn it over to Joseph to piggyback off of Stephanie's points. If you can dig a little bit deeper into some of the inherent and significant limitations of the blockchain.
Sure. So one of the things that we have to be careful about with really, this is with any emerging technology, is this idea of techno-utopianism. And that's the idea that, we have this new technology, it's emerging and it does all these great things, because for every new technology that solves an existing problem, it creates a new set of problems, and new technologies rarely live up to the hype. So the first one is that blockchain is, compared to using the internet in most use cases, it's very complex, and you need people with special technical training. It's not something that is easily accessible. Now that's changing for the better on a fairly rapid basis, but to use the internet, all you need is an internet connection and a device, and you can pretty much do just about anything. The second is, and this is something that Stephanie mentioned, is that the blockchain is slow. And it's by design, in the sense that the proof of work is, you don't want blocks added to the blockchain until they're validated. So to give you an idea of scale, the Visa payment network can process about 24,000 transactions per second. PayPal can do about 200, and blockchain can do about 10. So to Stephanie's point, the idea that we're going to be transacting, you're going to go to Starbucks or someplace else, and you're going to be quickly doing things in a retail scenario, that's a ways away. The other limitation, this is a little bit more of a macro thing, is what's called the 51% attack. And that is, if a group of miners or an entity were able to control more than 50% of the mining network, they could conceivably they could take over the network and add transactions that would be problematic. And then there's a few more, but the other one is that if you trust someone, like we're all trusting each other right now that we are who we say we are, blockchain isn't particularly useful in a high trust scenario. So it's more suited where you're doing things pseudonymously, where you don't know the other person. There's a few others, but those are the main big ones. And I would say, to Lee and Stephanie's point, I think probably the speed of the network is probably the limiting factor, at least in terms of the payment network.
Thank you, Joseph. And you brought up an interesting point with the internet and everyone using it. I may be dating myself here, but I remember when we first got a modem in the 80s, and it was, I think, 300 baud, and it was a very complex process to get a very limited amount of functionality. And now everyone has the internet on their phone. My mother has, a smartwatch so obviously it's been adopted by just about everyone. And Lee, I'd like to talk to you about, the future of blockchain and how that rests on the idea of mass adoption. And if you could share with us your thoughts on the path to mass adoption, and specifically, how is the Texas Blockchain Council and the two recent pieces of legislation that passed, the Texas House and Senate, a model that other states might be able to follow?
Yeah, great question, Jason. I will just provide a little bit of maybe friendly pushback to Joseph's points about the distance, the time that we are away from mass adoption. In the early 90s, people didn't think that just a few years later they'd be sending emails on their phone every day, or at that time it was probably on a PC. And then a few years after that, the iPhone would be invented, if you could send emails on your phone. So I think we're just a few years away from the Lightning Network actually being used for mass adoption. You can use the Lightning Network to make payments today via Bitcoin. So I think that we're really not as far away from that as we maybe think we are. But that's just kind of neither here nor there. So here's the pathway to mass adoption. We're seeing incredible amounts of debate in DC right now over the infrastructure bill. And there's a crypto amendment in the infrastructure bill that defined broker pretty broadly and pretty loosely. And it was clear that the senators and their staffers, when they were creating this amendment, Senator Portman from Ohio, they didn't really understand what they were talking about as far as what is a broker in the crypto industry. And they wrote it too broadly that it might even encompass an individual interacting in crypto, or a software developer, or someone who's making a digital wallet, when really all they were trying to do was target centralized exchanges to make sure that the IRS reporting requirements were similar to other financial services apps, so that people were paying their taxes on crypto. And we definitely support that. We support individuals paying taxes, capital gains on crypto. I think that's important because as law-abiding citizens, as patriots, all of us have a military background. We know that it's important for us to act within those bounds. But we need to have educated lawmakers coming up with that regulation, and not folks, like the senator from Vermont and the senator from Alabama that disallowed that amendment to take place. So now it's going to the House as of a few hours ago to really look at whether or not we're going to have smart regulation or regulation developed by people that don't really understand what they're talking about. So in Texas specifically, Jason, you asked about Texas. We've crafted alongside our legislative partners 2 pieces of legislation that were passed into law a few months ago. Governor Abbott signed those early in June. One of them is to create a blockchain working group that will create a pathway for the state of Texas to invest in this technology and to basically outline how the state should involve itself in blockchain and crypto. And the second one is an amendment to the Uniform Commercial Code in the state of Texas. Each state has their own UCC. Wyoming has amended their UCC for the purpose of blockchain and crypto. They have 13 bills that they've passed on the subject. Our bill in Texas went in the same direction. So Texas becomes the second state in the country to define what virtual currencies are, to define what it means to control a virtual currency, and that's through possession of a cryptographic key or a multi-signature arrangement if you want to custody your crypto or your Bitcoin at a company like Unchained Capital or something like that. And then lastly, what does it mean to perfect a security interest in Bitcoin or another cryptocurrency? Before, you might have to, and when you're perfecting a security interest in a general intangible, what I mean is you're basically taking that as collateral for a loan. So maybe you take, $10,000 worth of Bitcoin as collateral for a $10,000 loan. It's 100% collateralized. Before, you had to perfect your security interest in that by filing a UCC1 statement or a financing statement with the Secretary of State in which you were doing that transaction. That doesn't really make sense for crypto. So what we did was we wrote the law to say, okay, if somebody is taking possession of crypto to perfect a security interest, they merely have to control that cryptocurrency. They don't have to file anything with the state of Texas, because that means that their address would be on record for the public to see. And that's a little dangerous, right? If you say, I may have a paper wallet or a hardware ledger or a hardware Trezor wallet at my house with large amounts of Bitcoin on it, that makes your home a soft target for theft. And so, those of us in the military, we understand soft targets. So we're trying to eliminate soft targets. So those are the changes that those laws made. The next real big step for Texas is a public policy conference that we're hosting in Austin on October 8th called the Texas Blockchain Summit. Senator Lummis, who's a big champion for the blockchain industry in DC, will be speaking, as well as the Texas Banking Commissioner, representatives and senators from the Texas State Legislature, and many more. So would encourage those, it's an in-person conference, so you have to be probably located close to us to come to that on October 8th in Austin.
Gotcha. Thank you. And Lee, I appreciate you sharing with us some of these specific policy regulations that you recommend to your legislative teams there. I'd like to bring Joseph and Stephanie in if you have anything to weigh in. What specific policies would you or do you recommend to either the state or federal government to strike the right balance between encouraging innovation but still protecting people in a way that's appropriate?
I mean, I guess it's a little bit difficult to suggest this specific policy right now, but I guess I would just echo what Lee said, that we need to have lawmakers that are educated on making these decisions and not just sort of throw it, like putting something into a bill kind of last minute, which is what happened last night.
Yeah, I would agree.
Great. Thank you. And I also feel the same way. It's interesting when things are thrown in at the last minute, and clearly people don't quite understand the entire situation that they're regulating. Joseph, I'd like to turn it over to you as the co-director for the blockchain hub at American University, which is a collaborative educational and research-based platform which focuses on disseminating knowledge and best practices related to the adoption and impact of blockchain technology. Can you talk more about the hub and how is it convening government workers, industry professionals, and academics to share best practices around blockchain technology?
Sure, Jason. And so the Blockchain Hub was founded 4 years ago. And in fact, one of the original founders, Professor Bob Sashina, who is the co-director, he's actually on this call, and he's actually an Air Force veteran himself. So basically, the university, and I had nothing to do with the founding, but the university was very forward-looking in that, blockchain, again, I mentioned this briefly, that there's many use cases. We talked a lot about payment transactions and Bitcoin, but we're talking about things like electronic voting, supply chain, process improvement, smart contracts. I mean, it's almost like, at the dawn of the internet, well, what do you do with the internet? It's more like, what can you not do with it? So the idea behind the hub was we wanted to have a place that literally functions as a hub or the central point where we're bringing together faculty, students, government, industry leaders, and folks like that to share best practices, collaborate on the capabilities, and again, also on the limitations of blockchain. Again, with every new technology, right, for every hold, there's a counter hold. And so we have multiple events through the year, but our signature event is we have an annual blockchain forum that we co-present with the Global Blockchain Business Forum. I'm sorry, the Global Blockchain Business Council. We normally hold that in January. We've had heads of state, captains of industry, and things like that. So that's our main strategic thing. We normally hold that in January, and you can reach out to me. I'll send you more information if you'd like to know. And then in between, we have a series of other events, guest speakers, and we've also added to the curriculum. So we now teach blockchain application. In fact, Professor Sashina, who's the founder, is on this call as well. He teaches an application course in that. And then I teach a course in business process analysis. And this year we introduced the idea of adding blockchain to improve business process. So it's kind of going from a kind of a top down now down to a very operational level where, again, what can you use the internet for? Well, you can use it for just about anything.
Gotcha. Thank you for that background. And Stephanie, you worked with Dr. David Chum, one of the earliest blockchain researchers and a world-renowned cryptographer and privacy advocate, as his COO for the blockchain project XX Network. You are currently the COO for Equa, a leading immutable governance platform. Can you share with us what you're doing in that space and who you provide solutions to?
Sure. For Equa focuses on, like you just said, immutable governance. So there's two things there. The first being governance. So we focus on all the sort of agreements that a company has and the way that they need to govern and make decisions. So companies make decisions with their employees, like you might sign an ESOP or you might have some sort of incentive plan for your employees. They make decisions and agreements when they talk to their investors, when they do different contracts. So we try to take all those governance agreements that company makes on a daily basis and then build software technology for them that ties to a blockchain to make those records of these agreements immutable. And what immutable really means, it's put on a blockchain, it's put on this sort of decentralized network, the trustless network that Joseph talked about. And it means that it's secure. And the fact that nobody can tamper with it, nobody can change it, doesn't mean it's necessarily private, although the records for these agreements would be private. But if anybody that's ever been through any legal situation and had like a dispute over something, they're like, okay, well, what happened to the record? When was it signed? We think if you can get all of these records organized in one place for your company and then have an immutable record where it was signed on a certain date, it was agreed to in this way at this time, and this person made this decision, signed on the blockchain, you'll have less disputes. And so the Equa stands for the first part of equanimity, which is what we're really trying to create.
Yeah. Thank you for that explanation and rundown of what you're working on. Lee, I'd like to turn it over to you to talk about, the future of crypto and blockchain, as we've talked about some different applications. What new industries do you see emerging, and which industries have so far been most receptive to blockchain technology?
Yeah, there's a question in the chat too that I may jump on real quick and just say, pertaining to my previous answer, stable coins are a great way for payments because they're less volatile. So somebody to ask about stable coins and if they were an efficient use for payments. Stable coins are tied to the value of a US dollar, so they don't move up and down like other cryptos. So you have USDC or Tether, which is USDT, which are great applications and use cases. So turning to the industries, Jason, that you asked about, where are these industries that are early adopters of blockchain? And Joseph alluded to this as well. It's really anything where you have players operating, either it's a business to business or business to consumer situation where there's a lack of trust and you need middlemen there to establish a trusted relationship so that commerce or transactions can transpire, which is the vast majority of the situations that take place in our lives. If we think about it, when I'm interacting with my parents, I may trust them 100% with any information, financial or otherwise. But if I'm interacting with anybody else on the internet, I probably have some level of distrust. I mean, even Bank of America, although I trust them, they're my bank, I trust them 99%. Beyond that, almost any other transaction that we do online, there involves a little bit of risk and there's some distrust there. So think about companies that operate in consortia, where there's multiple different companies. Supply chain is a great example. You have third-party logistics providers. You've got the shipping company. You've got the purchaser. You've got the manufacturer. There's several different companies that are they've entered into a business relationship, and they have to keep meticulous records because each business has a slight incentive to maybe fudge things just a little bit, or to introduce maybe a little bit of cost savings that the other people in the supply chain wouldn't want to be introduced, and they don't think that they're paying for that to not be there. So supply chain is a great example. Medical records is another good example. When we go to the doctor, we have to re-enter in all this kinds of new information that we've already written in on forms at previous doctors, or maybe even at the same doctor, and they've lost it, or it was, you're going to see a specialist. Why don't we just own a digital copy of our medical records in a digital wallet based on a blockchain, a permissioned blockchain of some sort? And permissioned blockchains are like private enterprise blockchains like you would see at IBM for Hyperledger. It's a little bit different than the financial use cases that we've been talking about on the call thus far. So there's a lot of use cases for blockchain that go beyond financial services. I think financial services are the number one use case for the next few years. But as that use case matures, we'll see the supply chain use case. We'll see the digital identity use case, which again, maybe voting or medical records on blockchain. As people begin to trust this technology a little bit more and see that it actually can produce results. And again, both my fellow panelists have said this, it is not a panacea. We can't use blockchain for everything. So we need to be sure that we're not using it for things like database management. It's just a slower version of a database, So if you're using it inside your company and it's totally within the walls of your company's infrastructure, digital infrastructure, that's the wrong answer, right? You're actually getting slower performance. It's really when you're introducing multiple other parties into the transaction, which, as I said before, is almost any kind of business transaction you do, but you want to use it for those specific use cases where it actually can provide value, and not just, because you want to be, have blockchain on your deck, on your, VC or startup deck. You've got to have an actual use case that blockchain works for.
I totally agree. Oh, go ahead, Joseph.
I'd like to add something to that, to Lee's point. So last year, a team of students came to me in one of the courses I teach, where they have to identify an emerging technology and then solve a problem for a business of their choosing. And so they chose sustainable supply chain management for Patagonia, which is a sportswear company that prides themselves on their sustainable supply chain. And I said, okay, great. And they wanted to make sure that things were organic or ethically sourced. And I said, okay, so you have a good combination of technology and client. And I said, so how are they going to know if I say that I'm growing organic wool in the mountains of Peru and that's entered into the blockchain? How is it going to know that it's actually that? And the student said, well, the blockchain knows. And I said, well, how does it know? And they said, well, it just does. So to Lee's point, the blockchain is not the eye in the sky. It's not the all-seeing, all-knowing. If you enter something into a transaction that claiming that it's certain purity or a certain product, and this is to Stephanie's point, once it goes in, it can't be changed. Now it can be appended. Like if I send Stephanie $50 and I meant to send her $100, I can't change that 50 to 100, but I could send her another 50. But I think that's a really key point, and I think we just have to temper kind of this idea of this techno-utopianism. I mean, I'm old enough to remember when the internet came out and we started sending email and it was great, but there was businesses that actually said, hang on a second, is this going to be like, people sending cat images and email and chat and dating and stuff like that? Or is this going to be like a real serious business to business? I know that sounds humorous now, but again, we have to take these things in context.
Totally understand. And as someone that gets a lot of emails, sometimes I do wonder if it's actually more efficient or not. I'm sure everyone on this call gets more emails than they actually want to. I'd like to round out the panel, Stephanie, with a question to you, and it comes up a lot. You see it a lot on Twitter and some other social media type sites. What are crypto airdrops? How do you find them? Do they matter?
So crypto airdrops are when a currency or is just sort of kind of maybe in the beginning stages and they're trying to gain adoption through the community. And so they take some amount of their tokens and then they airdrop them to a number of wallets, which are different addresses that people have that can hold those tokens for whatever network it is. So kind of the history of airdrops, I think back in like 2017, there are a lot of airdrops you could easily find. 2017, like early 2018, online, just like through early crypto networks. But then, there became sort of tax implications of doing airdrops in the United States, and they're kind of pulled back. So I would say this isn't quite an airdrop, but on Coinbase right now, you can go and it's like a sort of a proof of learn, and you can learn about different networks, and then they will give you a little bit of that currency that they'll hold in their wallets through your Coinbase account. So that's what I would recommend versus looking for different airdrops online.
Gotcha. That's very helpful. Thanks. I'll be logging directly into my Coinbase account after.
Yeah. I don't know. Have you done that before? Like
I did one of their learn things. I'm not exactly sure their payment mechanism, but
yeah, no, yeah. It goes very quickly right into your account. They seem, yeah. Anyway, and then you can trade it right into Bitcoin. So
that was my plan. So thank you for giving us a little background on that. And with that, I believe we're coming up to the end of our time here, and I want to turn it back over to Catherine.
Oh, thank you, everyone. This was an excellent panel. I think it's safe to say that whether you're a novice or an expert, we all learned something new about Bitcoin, crypto, blockchain. Thank you, Jason, for moderating. I really appreciate you. I've always loved working with AmeriVet Securities. And thank you to Lee, Joseph, and Stephanie for sharing your incredible expertise today. We will see you at the top of the hour. That's 1 p.m. Eastern Standard Time for our fireside chat. Master the crypto, tokenized issuance and trading of securities. Thank you, everyone. Thank you.
Thanks, Catherine.